Yeah, there's
Yeah,
the
definitely.
cattle behind you. I see it. All right, so we got to talk about this unemployment rate because, you know, Washington's trying to come up with a plan, but there's a huge piece of me that says, you know how you get the people back to work? Get the government the heck out.
No, I completely agree. It's good to see you, Tracy. We've missed you. First and foremost, one of the first things that we need to do is we need to provide small businesses with the ability to have adequate financing and capital. That's the biggest thing. You can't hire workers with lollipops and promises. You need actual cash. And since the banks have been freezing up lending, that's one of the problems that we're running into, and I'm running into with some of my clients as it relates to hiring workers.
So, and what we know, though, unfortunately, is that the banks actually do have money. But the uncertainty in the overall economy is what's preventing them from actually loaning money. And you can't blame them, right? I can't make a loan to you if I don't know, you know, for all I know, you're going to get laid off in 6 months.
You're right. Everybody's actually sitting on the sidelines, including small business owners as well as the banks. The banks are sitting on wads of cash in their proverbial mattresses like we are. And so they're sitting around waiting to see what's going to happen with the debt ceiling issue, what's going to happen in the markets and stability-wise. Because this is what I'm hearing. People don't want to invest in new workers and in new opportunities only for their tax rates to skyrocket, only for the market to tank and for them to lose, revenue share as well as growth and market share.
One of the things you also suggest is tax incentives that target service-based businesses. What do you mean by that?
Well, currently in the tax code, we're seeing there are a lot of incentives for the purchase of capital equipment. And historically, that was geared towards the manufacturing community. So the first biggest thing that I see with a lot of my small business clients is the fixed asset or the depreciation deduction they can get, Section 179. Now, that is great if you're going to go out and buy new machinery and new equipment, but when you're dealing with a service-based business, i.e. a CPA, a doctor, a lawyer, or what have you, they're not going out and buying big pieces of equipment. They're properties in their mind and in their people. So we have to figure out a way to create some type of incentive in order to make it easier for them to hire new workers and save money on taxes.
This sort of, though, goes against, you know, the first thing I said was that get the government the hell out. So what we're saying is, you know, but at the same time, we're saying they need to somehow create incentives. So I guess we do need some sort of involvement.
Well, yeah, because with the government, creating the incentive doesn't necessarily add a bigger burden to the government as a whole. So what will happen with an incentive, i.e. currently right now with the tax code with depreciation, it's already in the tax code. So all I need to do is think of, with my small business clients, to say, hey, if you purchase this big piece of equipment, you can deduct it all in the current year and therefore save money on taxes and keep cash flow up. And that's just a perfect example of doing that without the government playing that much of a role. And it doesn't take that much for the government and Congress to do that, especially given the current economy and the current conditions of the market now.
You know, Ebong, one of the problems we have with our major corporations is that they do so much business overseas, and our tax code is so inefficient and doesn't benefit anyone when they try to bring that money back. So all that money stays overseas.
That's a very good point. I mean, and there's a recent interview that the chairman and CEO of Cisco talked about, where he had over several $billion sitting overseas that he didn't want to repatriate or send back to the U.S. mainly because of the tax rate. And there are other countries like Ireland who has a lower corporate tax rate that's advantageous for a multinational company to keep money over there. And that's currently legal. That's currently in the tax code. So we need to figure out a way to repatriate these earnings and maybe even set up a tax holiday. Look, I love tax cuts, but right now, because of the current tax system and the tax code, it doesn't behoove companies over there to bring money back so they can only pay taxes on it. So maybe create a tax holiday, maybe a 5% fixed rate for a month for all the big companies to repatriate earnings. 5% of several billion is still better than 30% of nothing.
I agree with you completely, and you're right. When you get a country like Ireland, that's corporate rate is 12.5% versus ours, which is looking at 40. Why would you bring the money back, right? But
exactly.
I think George Bush did this in the past, and I think they found that even with the tax holiday, companies did other things with the money that they repatriated. They didn't go out and hire people, and I think we would have the same problem here based on what you and I just talked about. You could bring all the money you want back right now, but if that uncertainty is still out there, I'm still sitting on that money.
And that's a good point. At the end of the day, the underlying issue is, does Congress have its act together? Does the market have its act together, and is it stable enough for me to want to invest my time and my effort and my money? But, I mean, another thing you can also do is maybe tie some form of some performance to the repatriation. So you can bring back the money, but you have to spend a certain amount in a certain sector or area. Like, I know that goes back into government. Maybe this is my independent libertarian side, boring the fence, but I think there has to be a way in order to bring the money back because we need it back.